5.5% interest rates, 3.4% inflation, double top bull trap. How do these things have to do anything with one another? Where's the market going? And I'm assuming the lingering question of probably what am I doing about it in my own portfolio. Let's get into this. So next upcoming CPI is on the 13th of February. We still have about a week until then, and last time we got a 0.3 print on the month-over-month core, which is higher than the 0.2 that we had before, which means prices are getting more, well, expensive. Consumer goods are getting more expensive, prices are getting higher. CPI year over year going from 3.1 to 3.4. Again, that's year over year. We'll be looking at that in a second. And somehow, if we're looking at the CME tool, up to date, you can see 85% of people expect no change, still us staying at 5.5% interest rates. Now that is an interesting question. Why? Because if we are attentive, and you notice the JP Morgan quietly or not so quietly have been saying since September 2023 that the prices of oil will skyrocket to $150, and asking, well, it's not pleasant for my gas tank, right? Hail Tesla, but how does that have to do with me? Well, we all know that consumer goods, the shipping of consumer goods, the supply chain, essentially anything and everything is highly affected by the price of oil. And if you've been somewhat attentive to the price of oil, we know that right now we're sitting at about 72.61. This is this very same second that I'm making this video. We're looking at the monthly chart, by the way. We can see we're in this channel, at least for the time being, and we've been retaining and respecting the price limitations pretty much as tight as possible, with the market being a little bit abnormal here and there. But we know that 70 used to be a good selling point. If 70 now has become a good buying price, which if you have been attentive at all to the experts that talk about commodities, you would have known that 70 now considered to be a good buying level. And if 70 is a good buying level, and we know that at 80, 90, and 100, everything gets affected. So how can we expect inflation to stay as it is? Because inflation, the price of consumer goods, are directly affected and severely affected by the price of oil. In fact, a big portion of why we had CPI drop so low in the last year is because we had oil prices correct back down, and basically correct back down, so pardon me, and at least normalize enough for the current inflation status to look as if, because remember, we are excluding energy and food out of core. So all in all, we're not doing all that good. If we're looking at the market, by the way, as of for today, we can see it's very red, and the talking heads of the media have a very weird tendency that I personally dislike, that when the market is red, they say, well, if the market is going down, then it's going to go down. I'm not going to do that, but I'm going to sound negative a little bit, and I have been saying what I've been saying in my community for over 2 months. Actually, we've been discussing this extensively. By the way, since I'm mentioning the community, here it is, at least an interesting portion of it. This is our Discord. You can see, by the way, I'm on it right now with our dear friend Stonks Tycoon. Stonks only go up. And you can see we have various rooms. We discuss anything from commodities to crypto, particular stocks. You have my internal community and people I talk to and discuss the technicals that basically I'm mostly into. You have, of course, the DGP, that's our drunk grandpa pub, where we just, when you get in, you better get your tinfoil hat on. So just hang out and let's get back to the topic at hand. So if we just said oil potentially going up, increasing in price, affects consumer goods, CPI goes up. So how can we expect the Fed to remain at 5.5? Or rather, the most interesting question that people keep on sort of going back to is people expect the Fed actually to cut rates. But they're not going to cut rates. In fact, they're probably going to potentially, if they will see CPI picking back up, increasing rates again. Now, I have made a couple of mistakes this year, some of, sort of, if you can call it like that. I have called and expected the Fed to go up to 6.25% in the previous year in 2023. That didn't happen, which is, we will see how it will turn out, whether it's a good or a bad thing. And we can sort of see the effects on the market. We can see that the S&P has corrected significantly, so ignore all the mess on my chart. That's something we're going to be talking about. And since actually I'm here, I'm probably going to dive right into it and mention the double top bull trap, which is something that is basically the opposite of the double bottom bear trap that we had during the COVID lows, well, subsequent COVID lows. Uh, if you focus and kind of ignore all the mess, if I'm gonna just do this, basically a double top bull trap is when you have a top, an evident clear top, market corrects back down, and a second top, okay, that is a fake breakout. It basically is a fake breakout on this. Actually, just if you give me a sec, what I'm gonna do right now is I'm gonna bring this up on the screen so you can see exactly what I mean. Okay, so this is that fake breakout that I've been talking about. Here it is. Now, the current conditions of the market are not great. Could be equated to a very solid house that its foundation is tiny little branches, and those tiny little branches is our supply chain, and our oil prices, and how the Fed is going to behave forward on. So our oil prices, as we said, potentially going to go up, and we are not experts, but if we listen to JP Morgan, again, as I've been saying, which were technically right when Jamie Dimon did say in 2020, I think that was somewhere before right before the Ukraine-Russia war began. He said that the prices of oil might go as high as 150. They ended up going 100 to $125 a barrel, but that is more than enough to disrupt and go the market very, very low, basically break down, because the goods themselves and the services, this way or another, are now priced significantly higher, and people inevitably purchase and consume less of these services and these products. And every service subsequently also gets blown out of proportion. Everything becomes more expensive. We see CPI skyrocket, and we go to the store and everything is more expensive. Fed are forced to either act upon it or at least definitely not cut rates. So, objectively speaking, we do have a couple of outliers, Tesla, Nvidia, that do have their own story playing into them that I want to mention just by passing a little bit. Tesla right now, as at the time of the making of this video, is at $179 a share. If you look at the channel, of course, it looks very tempting, and the bottom of the channel is around $109, and over time it can go even lower, maybe to up to around $105. Is that a possibility? Yes, that is a possibility, although I'm not going to reveal. There are different supports and resistances that are in play and potentially could hold off the price action from just falling that low. Although if you've been a part of the community, shameless plug again, we actually have a dedicated room for Tesla. I'm gonna brag about it right here. We have a dedicated room to Tesla and Palantir and other cool stuff that we have here, even for the public, by the way. And just in general, in the community, I've mentioned before that I expect the price of Tesla to drop to 150, 130 range, anywhere between 130, 150, and could even have some slippage lower than 130, maybe 125. Not nothing more significant than what already suffered. Does that mean I'm negative on Tesla and I'm bearish? Not at all. In fact, I'm tremendously bullish on Tesla, and I think Elon is an amazing CEO and a brilliant guy that is going to bring that company to new heights that nobody's seen before. And the robotics segment and the autonomous driving and the energy and the $25,000 vehicle and the Cybertruck and the semi trucks. There are so many things that are not considered in the play of Tesla, and just to kind of throw it out there, I'm tremendously bullish on Tesla, and I do think that in the future it's going to be a highly valuable stock and a highly valuable staple in our life. More so than even now. Right now, it is nothing in comparison to what it's going to be. But I do think subsequently, due to the market conditions that I think are coming, that I think essentially we're going to have a correction. Tesla does not live in a vacuum, nor does Elon is contributing with his behavior to the price right now. He is a bit controversial. We know that. All sorts of fake allegations are out there. A lot of just noise and propaganda, if you ask me, that is generated by the legacy car manufacturers. All the culprits that go in mind probably are participating, and that's nothing new. So, with all due respect, I do think Tesla is right now tremendously undervalued. So I say the lower it is, the greater it is for you. Pick the more the merrier and hold. This is not a buy now, sell in a couple of weeks. This is definitely DCA into it and hold for several more good years, and only then it will actually start yielding what it's worth. Now, Nvidia has broken any normalcy, and I do know I have a couple of channels on the chart in this fake gap. By the way, the gap is a fake gap. Basically because there was full price action taking place in the pre and post market during the earnings that basically made it skyrocket as is. And even with that in mind, there are several suspicious things that are going on. Nvidia investors, I think, understand that the market will break down, and they are enjoying this FOMO. This is just pure FOMO, if you ask me. Yes, the company is great. Yes, they deserve high pricing. With everything in mind, this is still excessive tremendously. I know they've been doing well from their AI data centers and everything they're involved in, and they haven't been doing as well on the individual consumers. Their GPUs are tremendously overpriced right now, and I'm surprised they've been holding up as they have, and they have not stood up to many promises they had before about building a foundry and going into CPUs. So there are a lot of wonky things about the story of Nvidia, and more so the thing that bothers me the most, Nvidia are not talking about a split, about a stock split, and that is something that usually would go for around these prices, and it actually makes sense. It will give more exposure to the vast majority of the market that right now find it to be more overpriced, basically. And although temporarily, of course, just in this not real way, it will decrease the price. Of course, it will increase the multiply the amount of shares. And over time, these pieces of pie obviously will grow if the company will be doing well. But I think the reason they're not announcing nor even going for it, or probably have thought about it, because if the market will collapse and they go for a split and their price will be low, it could end up as them shooting themselves in the foot, because the price became too low. So too low in that sense that post split is going to be low anyway, and with the market crashing, it will be pushed even lower, and then they will be forced to do a reverse split, which is a negative sign. It's not never looked upon as a good thing by the market, and can affect the price to break even further. Basically, they can create this artificial situation in which the price of the asset will be tumbling down for no justified reason. While they will be actually doing a lot better. Now, what else do I want to mention? Of course, I want to mention Palantir, one of our beloved stocks in the community. It has been doing okay and floating above the 16 area. We haven't seen the lows that we've seen during COVID. But I do think that we will see some lows again. I do think that we will break down if the market does break down, and I do think it will, because CPI will hit back up. Fed will have to react. Of course, we have a significant amount of time by the time that we have CPI. The CPI numbers come out on the 13th of February. We get the January and February CPI that we're pardon me, big mess. What I want to say is that on March we're gonna have the FOMC make a decision based upon the numbers that the CPI numbers that we're gonna get right now on January, February, and March. And my assessment that conditions will not improve. In fact, if again retracing back to JP Morgan, if they're correct, and during this several months, under the pressure of the Middle Eastern war that is coming to a bit of a standstill right now, at the same time accelerating on the front with the Yemenis, with the Houthis there, and the US Navy. We know that the Americans have been responding quite severely in the last couple of days. This powder keg in the Middle East can erupt, and let's not forget that Ukraine and Russia war is still ongoing. Of course, we have the potential powder keg of China-Taiwan erupting. So there are so many things that are currently happening, and of course, we can mention what's happening in Belgium. The farmers are protesting. Basically, disruptions everywhere we look around the globe. So, like I said, it's a solid house. If we're looking at the stock market right now, other than today, overall, if we're looking again at Nvidia, it's in the hundreds of percents, where I think we're looking at 200 and something percent over the year span. Up. So the market is tremendously high. In fact, on the S&P, we're hitting all-time highs every other day. And we could go even higher if I'm going to bring back some of the drawings and some of the voodoo magic that I dabble in. And again, gonna talk about the community a little bit. This is a big part of the community. We do talk about technical analysis a lot. In fact, I have my own internal community that is dedicated to technical analysis. We go through various analysis of various individual assets, the overall market, and kind of come to singular conclusions. We discuss this. We have meetings. It's a pretty cool thing, of course. If I can only recommend, you can sign up through the Patreon. The link will be somewhere there, either in the description or above or below, so somewhere in the video. Of course, don't forget to smash the like, subscribe, and all the great stuff if you want to be up to speed whenever I make videos. I know I've been on hiatus for quite a while, but that's due to the war that we had here in Israel. I'm not going to talk about it too much, or still have, actually. It's still ongoing. But I'm not going to talk about that further on. Let's talk about the market. This is why we're here. So the double top bull trap that I've mentioned, it's basically the opposite of that double bottom bear trap that we had during the COVID lows. And we have these various channels that you can see, supports and resistances, all sorts of black magic that's going on. And through my assessment, you can see, and it's not certain. I'm going to try to be as precise about my assessment and what I mean by all these weird drawings that you guys can see. Now that it's adjusted to the weekly, we can see it a little bit better. So I'm assessing that we're going to have another high. This high that I pointed out here could be it could be that it will never play out. This is my assessment of the highest high we can potentially go. You can see the value right there on the right side, around 5,260-ish area. Let me help you out with that so you can see precisely, or give or take precisely, it's 5,254 area. But that's due to some calculations and channels and all sorts of, again, black magic that I do. If you want to be a part of that magic, join our community, which, by the way, is also Tom Nash's community. So it's kind of a backdoor into the community as well. You can take advantage of the cheaper prices. But so as you can see on the chart, I assess that the market will still, even if correct, and these points are not a certainty, they're potentials. And to be more precise, nothing is linear in the market, and this can get prolonged. In fact, it could be, all we need is this fifth point to be higher than the third point. It can be even just a tiny bit above, and the technicals will already be satisfied. So my weird assessment, if you're looking at this again, potentially it can end up here, here, in various ways. Just what I'm going to say, it has to be above this third point, even if just a tiny bit, so even if just by this much, right? Technicals will be satisfied with this. Of course, we do need to establish another low point. Pardon me for moving and disrupting everything here. But if you're attentive and you notice that there is an overall overarching cycle that I point out here, and yes, I know it looks crazy, but if you think about it, and inflation picks back up, inflation, and Fed are forced to react to it, the market is not going to be positive about it. And more so, what most people do not comprehend is that this interest rate percent that we have to deal with right now is not temporary. In fact, J. Paul said multiple times, the assessment that we're looking is 12 months out at least. Of course, that can change, but for the time being, is that things will not start to normalize anytime soon. And we do have supply chain disruptions that are still persisting from COVID. We've never normalized our supply chain, and we already have supply chain disruptions that are coming from the Houthis and the Red Sea and the Suez Canal. And the supply chain is such a delicate part of the puzzle that once it breaks even a tiny bit, so we're going to feel it affecting everything. Then we also go back to the oil thesis, the oil going inflating in price thesis, and we end up with that solid house that we've just explained that it is a solid house, and we can see it on the market right now. But those twigs potentially are going to break throughout the following quarter or two. And I'm not telling you that the end of the world is coming. I'm just telling you that potentially it can be very, very, very unpleasant. Okay, that's all I'm going to say. And remember, these things are current assessment. They can change. But because of the disciplines that I'm working with, and because I have a more of a traditional outlook, and I do follow, pardon me, harmonic patterns on far bigger overarching timescales and cycles that people often tend to miss, I started noticing certain things that are very worrying, signs that are telling me that even if not liquidating your entire portfolio, you should definitely be ready for an earthquake in the markets that you and others were not necessarily ready for. And I know people such as Tom Lee are saying that 2024 is going to be amazing for the market. And I'm not saying Tom Lee is wrong. I'm saying potentially it can end up being great. Potentially it can end up being great because in the market, often people heard me say, or at least a quote I like to sort of mention of my own, we gain in droplets while we lose in buckets. So this trajectory that is very, very slow can be accelerated significantly so, and we can end up hitting this support or even relying on this support, right? Or even having some slippage, but I really don't see that happening. That just will put us tremendously low. I just expect the market to break below that A point. Those of, again, shameless plug again. Those of you in the community know exactly what I'm talking about. We've been talking about these things for actually more than a couple of months, about almost 2.5 months that I've been talking about the harmonic patterns that are starting to show up and the fears that we have and how we should get ready. So I think at this point in time I've mentioned everything that I wanted to mention. Guys, I would tremendously appreciate it if you drop me a like and a subscribe. And that way you will be always up to speed whenever I make these videos, because as you know, I'm not one of those grand YouTubers and I don't make a video every day. I make a video whenever something's tremendously important. I know this video was long overdue, but as you can imagine, that is due to the war and all sorts of things that I've been dealing with here. But yeah, thank you very much for your time, and I hope to see you on the next video. Bye. Peace.